Hello and welcome to Morning Trade with Money Control. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly, your queries during the show. So please keep commenting on our live feed. We'll have your questions addressed in the last leg of the show. Before we bring our guests on board, let's see what the global setup looks like. Wall Street clocks a smart rebound with the Dow jumping around 2% after Bank of England's surprise move to intervene in the bond market to stabilize conditions. Meanwhile, Asian markets also jumping in early trade. SGX Nifty hints at an open above 17,000. European markets close with modest gains despite economic concerns surrounding inflation and global growth outlook. Stoxx 600 ended 0.3% higher following a choppy afternoon. Stocks in the spotlight today are Ramco Cements, Anupam Rasayan, Canfinhomes and Agarwal Industrial Corporation. As strong dollar takes the shine off gold, we assess if the USD has replaced the yellow metal as a safe haven investment. All right, let's get started and talk about what's happening in the money markets and its subsequent reaction on precious metal. I'm talking about gold. Let's bring on board Navneet Damani of Motilal Oswal to talk about what's happening with the precious metal. Navneet, morning and thanks for joining in. Gold prices are, close to 2.5-year lows as far as COMEX is concerned. The rising interest rate regime looks like it will continue for another few months. Could it completely sort of impact the attractiveness of gold as a safe haven, at least over the near to medium term?
Well, good morning. As you rightly said, it's the dollar which is the new safe haven, and probably people are taking some shelter under a dollar as compared to gold. And see, with the current macro backdrop and the current geopolitical stress, you see no kind of respite coming into the gold prices. In fact, it's corrected from highs of $2,050 to currently trading around $1,650. That's about a 20% fall from peak. So now a lot of participants believe that it's a bargain hunting level, but still the current backdrop and what is happening in the currency front and the bond front over the last 1 week gives us more jitter that there could be some more pain in store. So is it a bottom or is it some more pain in store is the question. I think we'll have to wait and watch probably for the next couple of weeks as to how this story unfolds as far as the bond catastrophe is concerned in the ECB as well as the BOE.
Okay, all right. But should existing investors in gold who probably enter at higher levels when, gold was witnessing a fantastic bull run, should they be worried or can they look at adding at these levels? Are we close to the bottom or do you see more pain?
Well, existing investors, in hindsight, everybody is right, and they should have taken a call to exit around 55,000 rupees to 10 grams of gold. But what has happened is you see a lot of outperformance on the domestic front because of the 6-7% or 8% depreciation in the INR as well as 5% import duty hike. So domestic prices are not as weak as what you see on the COMEX. There is still some hope for the domestic investors, and I believe that with the current backdrop where the depreciation in the rupee is very strong, you can see that outperformance is likely to continue on the domestic front. So stay invested, and probably in the next 12 months time frame, your returns are likely to be better than what they are today.
Yeah, that's what I was getting to, because despite traders ramping up short positions, fund managers turning cautious, gold has continued to outperform equities and most of the commodities as well. But since you track the entire commodities universe, do you still like gold better than the others given its continued outperformance, or are there any other commodities as well which look poised to deliver good returns maybe in the next 6 to 12 months?
See, comparing gold to any other commodity is a little difficult, but you can compare it to silver to some extent because it falls under the precious metal basket. However, we have seen that in 2018, 19, and some part of 2020, both the metals were rallying, but suddenly the tide has turned around into the start of 2022, and both are probably corrected. Gold has corrected about 22-23%, and silver has corrected about 35% from its peak. Both are looking attractive at this point in time. Now comparing that which one is better, and probably in the next 12 to 24 months time frame, which could give you better returns, my bet will be on silver, because I see that once the interest rate hikes settles, once the recessionary fears are done dusted, then you will see a lot of buying coming into the industrial metal space, as well as a lot of safe haven moving out from dollar to gold once again. And that is where silver is likely to outperform gold. So if gold is likely to give you about 7-8% returns from here, silver could give you about 12 to 15% returns in the next 12 months. And similarly, for a 2-year time frame, our bet is that about 20% returns is very much possible for silver.
Okay, all right. But if we compare, or if one wants to make a choice between both of these precious metals, which one are you tilting towards?
See, most of the funds are now advising a balanced approach, a mix of gold and silver. Our approach is similar, that one should not be invested highly into silver, because silver is a very volatile commodity, and once it could give you zero returns for years together and probably give you about 50% return in one single year. So it averages out your return probably in a longer term time frame. If you are a short term investor, you will be worried that silver is giving you no kind of return, but gold is likely to give you about 3 to 5% returns. Our bet is it should be a mix of gold and silver. Maybe if a 10% portfolio allocation is towards gold and silver, then about 5 to 7% should be for gold, and remaining 5 to 3% could be for silver.
Okay, all right. And on the downside, any important levels to watch as far as gold is concerned in case it keeps eroding?
See, we saw 1610, 15 levels 2 days back, and I feel that those levels are very, very critical. Below that, prices might just fall towards 1540 immediately. So these levels, if not taken off, will hold, and probably if 1540 is also arrived, then those levels are very good levels for a medium-term perspective entry. However, for silver, a good entry level is around current levels. But if prices correct towards $17 because of the current backdrop of the bond market and the currency market twist, then you might see another leg down, and that could be levels to enter. On the domestic front, if I mention these levels, it could be about 48,000 for gold on the INR terms, and maybe 54,000 for silver on the INR terms.
Okay, all right. Navneet, thank you so much for chatting with us this morning and talking to us about the way forward for gold, especially those investors who have invested and are wondering what to do with it. Okay, things look like they will stabilize eventually, but let's talk markets. Shrikant Chauhan is here with us from Kotak Securities. Morning, Shrikant. What is the trade setup telling you? Comfortably above 17,000, or will we just hover around, at that level?
Yeah, good morning, Karunya. Good morning, everyone. I think the markets are now going to stabilize. That's the overall view, because the markets are highly oversold in the short term. It was actually consolidating after falling to the extreme levels, and it has spent nearly 3 days between the range of 16,800 on the downside and 17,200 on the high side. After the specific news flow and the way there is a technical formation in the market, we are of the view that 16,900 should be the next level to watch out for. Today, after opening higher, if we see the market is sustaining comfortably above the mark of 16,900, then the chances of hitting 17,200, 250 would turn bright. So important level is 16,900. Otherwise, the market will remain in that trading zone of 17,200 and 16,800. Also on the downside, in case because of any reason, if we see the market is breaking to the level of 16,790, then the current formation will act as bearish continuation formation. And in that case, the chances of 16,600 would turn bright. But we are of the view that 16,900 should act as very good support for the market. And in the next 1 or 2 days of time, we should see the level of 17,200 or 250 on the high side.
Okay, all right. Let's bring up some individual stocks as well quickly, which could be in the limelight. The first name I want to flag off is canfinhomes. PGIM India Mutual Funds has sold 10 lakh shares in the company, close to 0.8% stake, at an average point of close to 470 rupees a piece. Before that, as of June 2022, PGIM held 2.5% stake, and now they have offloaded about 0.8% of that. Talk to us about canfinhomes. It was under tremendous pressure in the recent past. What's the way forward? More pain?
I think, current levels, most of the time acted as very good support for the stock. 450, 460 in the past also, when the stock was down in the month of April 2022. That time also it acted as very good support and we saw some rally from there. Today also we need to see that whether the stock manages to hold above the lowest of the previous day's levels, which was around 450. So if we see the stock is holding above 450, then the chances of dead cat bounce is more likely. So we may see the levels of at least 530, 540 in next few days after this particular block and all. But if we see the stock is sustaining comfortably below the mark of 450, then the chances of hitting 400 or 380 would turn bright.
Okay. Another stock I want to flag off on the back of some fund action or a bulk deal rather is Agarwal Industrial Corporation. Ashish Kacholia has bought 2 lakh shares, which amounts to almost 1.5% stake in the company at an average price of almost 570 rupees a piece. Now, yesterday, we saw a very strong uptick come by on this counter. But from these levels, close to 600 levels, what do you think will happen next with Agarwal? Will it keep building on the momentum or could it see some more consolidation before it meaningfully picks up?
Yeah, for Agarwal Industries, I would say that the stock is forming a classic rounding bottom formation. In fact, it is into this particular consolidation since 2017. In the year 2017, the stock was around 800 levels. From there, all the way it has fallen to the levels of 50 or some 70 levels during the pandemic period. But now again, it is regaining the overall momentum. And after spending almost 2 to 3 months within the range of 700 to 450, 500 on the downside, we are of the view that it is forming some triangle formation, and after the completion of the formation, we are expecting further more activity. So certainly it is going to gain furthermore action in the market. And if there is specific news flow that somebody has taken a very a strong interest in the company, then certainly it is going to move on the high side. So we are of the view that we should be buyer if there is a medium to long-term view with a target of 800.
Okay. I want to also talk about some more stocks from the broader markets that could be buzzing in trade. Ramco Cements has commissioned its 5th cement plant in Andhra Pradesh. It has a clinkerization capacity of 2.2 million tons per annum and it's going to be set up with a project cost of 3,000 crore rupees. Ramco Cements, again, we're seeing some bounce back coming by, but it's still about 40-45 rupees off its recent high that we saw just about 2 weeks ago. What do we make of this uptick? Is it going to sustain?
There is a lot of action and activity in almost all the cement companies, and especially Ramco Cement did well when there was recovery in the market, especially in the sector. And after correcting from the highs, I think again it will be an opportunity for medium-term investors to invest even at current levels. With a target of minimum 850, 870 on the high side, and maybe in the long run, we may even see the levels of 1,000 plus. So we are expecting furthermore activity in almost all the cement companies, and in that, Ramco Cement is also doing well.
Okay. The last one on my list is Anupam Rasayan. They've launched a QIP after getting all the necessary approvals. The floor price is fixed at 763 rupees a piece, and the company could end up offering a discount of 5% on this floor price as well. Right now, the stock is perched close to those 760 rupees levels. But let's talk about the last 2 months when the stock has, given up about 8 to 10%. What do you think lies ahead for an Anupam Rasayan?
Okay. For Anupam Rasayan, if we go through with its daily pattern, then it is consolidating and it is in the rectangle consolidation since last almost 3 months. It is holding well above the mark of 740.45 and it is finding resistance around 800, 810. Broader formation is suggesting us that the stock is into pullback mode and it is heading for the levels of 950 or 1000. So certainly we are expecting current formation to break on the upward side. So it's a buy at current level with the stop loss at 740. We can expect at least 810 and maximum 950, 960.
Okay, all right. Okay, let's start addressing some of our viewer queries also real quick. Rahul Das is writing to us and he wants your view on Nazara Technologies. Talk to us about what's in store for this one. What are the technicals pointing to? Because of late, definitely it has, been severely impacted and has been a big talking point among investors.
Yeah, it was into limelight after the listing. It went to the levels of 1600, 1700. From there, all the way it corrected back to the levels of 500, 450. But the positive part is that since last few days, the stock is forming higher top, higher bottom formation, and also we are seeing some blocks on a frequent basis. So till the stock is above the mark of 600, we can expect pullback to continue up to 900 or 950. But 600 is going to act as very good support for it. In case if we see the stock is breaking to the same, then we need to be careful or we need to exit out of long positions. So the resistance is 900, 950 and the support is around 600 for the same.
Okay, all right. Moving on to our next query, and this is coming in from Siddharth. He wants your advice on Motherson Sumi and asking if he should hold or sell. The buying price is not mentioned, unfortunately, but what is your assessment of the technicals?
Yeah, so they have demerged the business, and after that, the current listing which is there is means they have in fact announced bonus issue also. So we are of the view that the way there is specific news flow in today's date from the European markets and the company's exposure to the same, we are of the view that we should hold on to the same. We are expecting stock to move between the range of or to remain between the range of 140, 150 on the high side and maybe 90 on the downside. So at current levels, certainly it's a hold.
All right. Okay. Sanjay Chaudhary is sending us a comment. He wants your view on Bajaj Auto. He bought at 3860. So he wants to know whether to hold or sell. A Bajaj Auto right now at 3500 odd levels is bang in the middle of its 52-week low and 52-week high range. So from this particular juncture, where do you think it'll head?
Yeah, I think all these two-wheelers are finding a lot of difficulties to sustain at higher levels. Whenever there is a sell-off in the market, we see very first sell-off in all the two-wheelers and especially Bajaj Auto and Hero Motors. But what you're saying is right. It is also very close to its immediate lowest levels and it has spent a lot of time close to 3500 levels. We are of the view that if there is a long-term view, at least view of next 12 months, then certainly we should hold on to it because specific news flow on the electric version is certainly going to come for the companies because all these companies are trying to build their forces on the same. So at current levels, it's a very attractive buy with a medium to long term view. It's a hold at current level with a stop loss at 3400. And with a trading perspective, I think it is better to avoid. It is better to focus more and more on four-wheelers.
Okay, all right. Moving on, Satya has mentioned Motilal Oswal in their comments and they want to know the medium-term view here. Again, this one also last 2-3 weeks has given up a tad, 80-90 rupees on the downside. Talk to us about the way ahead for Motilal Oswal.
So purely on technicals basis, the stock is finding resistance at every rise and it is forming in fact lower top, lower bottom series. It is holding above the mark of 700, but the overall volume pattern is not indicating any significant activity or any significant technical pattern. So it is better to stay away for the time being from the current stock. There are a number of stocks and number of financials where one can trade or invest. In fact, large cap banks are really doing well and they are going to do well. That's the overall view. So instead of focusing on this NBFCs or maybe broking related companies, it is better to focus more and more on the banks which can do well in the near.
Okay, all right. Shrikant, how about your own preferred picks in the market right now? Which stocks do you like?
Yeah, I think we need to focus on those companies where there was a huge, those who have fallen badly in the recent sell-off and where there is a huge amount of short sell positions. We like Reliance Industries because yesterday the stock was down, but it was very close to its important support area of 2350, 2300. Also, if we go through with the activity of Brent crude, then it jumped to the levels of 89 from the levels of almost 85, 86. So it is positive for Reliance. Also, technically, the stock is very close to its important support area. So it's a buy at current levels with a stop loss at 2320. Again, we can expect 2400, 2425 on the high side. And the other stock which we like is Jindal Steel and Power. So there is specific news flow for the company, but at the same time, yesterday we saw a huge amount of volume-based reversal activity on the stock. So again, here also we have a bullish view with a stop loss at 390. On the high side, again, we can expect Jindal Steel and Power to move towards the levels of 420, 425.
Okay, so two buy calls coming in, one on RIL and the other on JSPL. Shrikant, great to have you on board. Thank you once again for joining us this morning. On that note, I'm going to wrap it up right here on Morning Trade. Thank you for watching. Stay tuned to Money Control. Markets with Santo and CJ comes up next.